Hello friends, this is Raj Sastry from Raj Option Trading. Today is February 1st, 2022. Let's talk about January effect. As you all know, there's an old adage that says as goes January, so goes the year. Let's look at this a little more carefully and see if there is any fact behind this. So with that, I have a quick chart here. It talks about performance of S&P 500 and major indices during the high inflation environment back in 2018. As you can see here, in 2018, Jay Powell really increased the rates aggressively and had some harsh comments about the increasing rate further. Look, S&P 500 tumbled down in 2018 by 6.2%. Nasdaq tumbled again 1%, which felt pretty okay. As you can see here, Dow Jones Industrial Average tumbled, and look, small caps took pretty heavily here, down 12% in 2018. And then you got industrials down 13%, financials also down 13%. Healthcare fared pretty well in 2018 during high inflation environment, up by 6.3%, and even real estate did pretty okay, but still down 4.3%. So we got to be careful. We are heading into high inflation environment. We got to learn from the history and see what's the best way to tackle. So with that, let's jump in and look at the January effect. As you see here, we got a quick chart. It's a eye chart. I will walk you through a little slowly here so that way you understand. So as you see here on the left hand side, I got here monthly performance. These are historic monthly performance of major indices. Look, all these are monthly performances. As you see here at the top, we got here January of 2022, which is just wrapped up yesterday, as you all know. Look, in January 2022, we got S&P 500, QQQ, which is Nasdaq, Dow Jones, IWM, which is the Russell 2000 small cap stocks, as well as IYR, semiconductor. You might say, I'm a semiconductor guy, I'm an Nvidia guy. You are also down here. Real estate, again, down. Only thing which is up slightly is China, mainly because they were down so much heading into this downturn. That's why they popped slightly, but it's not a major pop at all. So with that, as you can see here, January 2022, all the major indices are down heavily. And then as you scan through here, we got same effects, similar effect in 2021 January. But look, this is not as severe. We have only S&P 500 down in 2021 here, but all major indices did well. We got IYR, real estate, a little bit down here, and otherwise, mostly, all the indices did very well. And as you scan through here, we got January 2016. Look, January 2016 was a little bit severe here. We got both S&P 500 as well as Nasdaq down here, and also small cap names also down. So as you can see here, this can be a little bit comparable to what we're going through here in a little bit smaller magnitude, as you see here. So see what's going on here as you look through here. We got major indices down as you extend through all the way through here. Look what happened to 2016. As you can see here, 2016 we are down, but for the year in 2016 we did pretty okay. For the year we did 9.5% positive in S&P 500. The point I'm making is really when all these indices are down continuously or simultaneously, Nasdaq, S&P 500, IWM, major indices are down, you can see a muted result, in the yearly performance, as you can see here. So that's why you got to be careful here. So the moment all the indices are going down in January, don't expect a huge pop for the year. Instead, expect a muted performance or even low at times. Now let's look at a little more down the line here. We got 2015. Look, 2015 also we had slightly down January, as you can see here. January we got down in S&P 500 by 3% and QQQ down by 2%, and we got IWM also down. As you scan through 2015 here, look what happened here. We got very much muted performance in the yearly performance. As you can see here, yearly we have S&P 500 down 0.7%, and Nasdaq managed to inch up slightly, but mainly other most of the indices are not significantly high here, muted performance as we say here. And then look, we got down January again 2014, as you can see here. Again, QQQ is also down, and even China is down, small cap is down. And as you look through the yearly performance is 2014 here, we did okay, not too bad, but not great like 2021 or 2019. And then as we scan through here, we got a few more. Look, we got 2009 here, which is again, let's look at 2010 here. 2010 also we are down, as you can see here, both S&P 500 as well as QQQ. And if you look through 2010 here, we have a performance which is okay, not too bad, 12% in S&P 500. I take that any time. And then we are heading into the great financial meltdown here around 2018, 2019. 2009, look at 2009 here. We did pretty okay. 2009 is the year where we come back from the financial distress and banking collapse. And if you look at 2008 here, this is a systemic risk, as we talk about, where all the major banks and financial institutions collapsed. Look, all the bets are off. We are down big time in 2008. Look, this is a big drop here. And we got a few more as you can scan through here. We got a down year in 2005. As you can see here, January is down in 2005. We are muted here in 2005, not too much performance. And we got 2003 and 2002 here, both down for S&P 500. And as you look through here, 2002 and 2003 here, 2002, I think we are so bad, as you can see here, but 2003 we managed to inch up nicely. The lesson you can learn from this is really when in January major indices are down, like here, like what we have done right now in this January. Don't expect a huge return for the year. Instead, expect a little bit tapered down, a result or a performance for the year. That's the call out here. And one more call out here is, the moment you're down big time, look at here, we got 2018 somewhere here, muted performance. In 2018, big, huge inflation worries. Look what happened in the following year, 2019. We have an outsized return in the following year. The point I'm making is really don't worry too much about inflation and stocks coming down. Buy some great stocks, as they go down, and the next year will be a gangbuster performance, just like we had in 2019 after 2018 collapse because of high inflation. And if you see the similar, you can see similar trend here. And look, we got 2014 here, where we got down here in most of these indices. And look at this is 2014, and 2014 I think we did okay, but 2015, if you see here, we are down in 2015. 2016 we managed to go slightly higher. And similar trend here, 2008 here, big downturn here. And 2008 and 2009 we had a nice performance. The point I'm making is really, when the market comes down like this, don't try to outsmart the market. That's typically does not work. But instead, buy some quality stocks and hold it, for a long time, and that will do very well for you. Typically, after bad year, a following year will be very good. So that's how you should invest for the long term. And now let's look at some more details here and go from there. And before I go into details, folks always ask me, is China a good hedge? As you see here, right now, China is up slightly for January here, but I don't think China is a good hedge, because China typically trades along with the US, mainly because US is a big end market for China. There will be slight differences, because right now China is battered big time, and now they're coming up slightly here. Look at maybe 2018 here. US is down because of inflation worries. And look, China is down more than US, 12% down as you see here. And you can see the same trend everywhere. Look, US is down slightly in 2015 here. And look, China is down 11%. So China is not a good hedge for US. They trade maybe along with the US and slightly, lower performance compared to S&P 500 on the down years. So with that, let's jump in here and look at what happens to other indices. Let's quickly look through this again. What I have here is on the left hand side I got January. You know January, how S&P 500 behaved in Jan 2022, 2021, and so on and so forth. That's the January effect for you. How did January go for S&P 500? So by looking at this, you can see, okay, how did January go? For example, 2016, January was bad, and 2016 we got a muted performance in S&P 500. In the major indices, as you can see here, we did not do very well, but we stayed above water for most part. And you can see here XLV, which is the healthcare, was down slightly, but otherwise we managed pretty okay here. And then if you scan through here, we got 20. We got few more down years, 2009 and 2008, as you can see here. But 2008 was a bad year for most indices, as you can see here. We did pretty terribly, as you can see here. And I think inflation year was 2018, as you can see here, 2018 right here. That's the inflation year. And look, we most of the indices came down here, with the exception of healthcare, which did pretty okay in high inflation environment, as you see here, and XLY, consumer discretion cyclicals or discretionary, they also did pretty well. And we got utilities doing well in high inflation environment, as you can see here. So with that, let's go into a little more detail, look at a few indices, few stocks, and see how they performed in in high inflation environment. So in a nutshell here, to sum up this list here, don't worry too much about January effect, but be careful when January is down. You can expect a little bit muted performance in stock market, but when January is down in multiple indices, like we saw in the previous chart here, look, January down in multiple indices, like in 2022, multiple of these indices are down continuously. Don't expect a huge performance here. Expect tapered performance in for the year, and even it can be even slightly down for the year. As evidenced by, look, whenever you have multiple indices are down, you can expect a muted performance. 2016 we talked about it. It's very muted when all the major indices are down. And we got other areas that we can look at. Where multiple indices are down, it's always pays attention. We should always look and be careful and expect a muted performance for the year for the most part. So with that, let's jump in here and look at high inflation and see what's going on. Look, this is a high inflation environment here. We got 2018, look, 1 January 2018 to February 2019. This was a high inflation environment, and we are looking at S&P 500, as you can see here. ES is S&P 500. So S&P 500, as you see here, is really showing some jittery effect here, or high volatility. Look, Jay Paul said he's going to increase the rates. Stock market came down tumbling, as you see here, and then it came up. This is similar to the rally that we are seeing right now. After a huge down week, there is a nice rally. That's what is going on right now. But don't be, don't take that for a bull market, because we have seen this game earlier. So it goes higher. This is where some of these big money managers download, and then it comes down promptly. This is again Jay Paul making one more statement. It came down. Then it went, came up and down, turbulent. Overall, it went up. But then Jay Paul, he said he is going to overshoot, and increased the rates aggressively. Look, market came down tumbling, and as usual, there are some rallies like we're seeing right now, but it came tumbling again when he made one more aggressive statement, and then it went up. So the in a nutshell here, expect this type of turbulence here. We are dealing with even higher inflation environment right now. So that's why, all these pops that you see here, it's good for you to unload some stocks you might have bought when it came down here. So it's, don't expect market to go up and up in this environment, because Jay Powell and the Feds are determined to really increase the rates and bring inflation under control. So that's S&P 500 for you. You might wonder, hey, that's S&P 500. I'm a QQQ guy. I'm a NASDAQ guy. Look what happened to NASDAQ. Same story here. NASDAQ came down when Paul made the statement he's going to increase the rates. Went up again, a relief rally, came back again, went up nicely, came tumbling down when he said he's going to overshoot. So don't expect, you're, going to be, buying Nasdaq, so you're safe. The In a nutshell here, you got great buying opportunity. Look, if you bought some here, bought some here, bought some here, you are sitting on nice profit here. That's what we got to do as investors. Expect, high inflation investing playbook here, and keep buying this bottom, and then you can do well. And next we got China here. You might wonder, hey, I'm a China guy. I like to buy China. Look what happened to China, right? China came even below here. You don't see any relief rally much in China. It came down. Small relief rally, as you can see here, but came tumbling down. So as inflation increases, because United States is a big end market for China, they will also come down along with the US. That's what happened in 2018, as you can see here. And then you might wonder, hey, I'm a small cap Russell 2000 person here. Look, Russell 2000, even though it had some, up and down, as you can see here. But look, when Jay Paul made a statement here, it came tumbling down here. So that's why, all these major markets will kind of act in unison for most part when Fed speaks and raises inflation, with the exception of one or two. We'll talk through that. But regardless, great buying opportunity. All these small rallies that we see right here, these are not permanent rallies. We can see them going down, as you can see here. And then finally, when Fed increases by, say, 50 basis points, or talk about some aggressive language, look, it will come tumbling down. So that's why you got to be careful. Buy small, buy consistently, and hold it for a while. And you might wonder, hey, I'm an Apple guy. I like to buy Apple. Look, Apple also came down. You have nice buying opportunities. Buying opportunity one, two, huge big buying opportunity. Look here, Apple came crashing down here. So that's why even Apple buy slowly on the down days. There may be some big $10 type increase like we saw earlier last week. But hey, Apple also, it's not immune to inflation. When inflation is high, when folks don't have money, they look at the necessities, and not Apple iPhone is not top of their mind. That's why there will be great buying opportunities even in stocks like Apple. And next, look at Microsoft here. We are looking at 2018 again, as you see here. This is Microsoft 1/1/2018 to 2/1/2019, high inflation environment. Look, Microsoft fared pretty okay here. They do have some good buying opportunities, as you can see here. But overall, Microsoft fared pretty well compared to other names here. So Microsoft is also a good one to buy on the dips. Satya Nadella is really leading the company pretty well. And then we got here Nvidia. You might say, I'm a semiconductor guy, Nvidia guy. Look, Nvidia, through the inflation, as you can see here, 2018 through 2019. Nvidia, as you can see here, it also had nice down pullbacks here, and huge pullback when Fed made some aggressive statement. So again, Nvidia is not immune. You could buy Nvidia also, as it comes down nicely and accumulate for the long run. It's one of the well-run company. And then you got your Home Depot. You might say, I'm a Home Depot guy. Look, Home Depot came down here. uh, down big time. So you'll get great buying opportunities. Even in stocks like Home Depot, Lowe's, Amazon.com, you can buy the dips and hold it for a while. And look, we got here Procter Gamble, which is again a consumer staple. You got to buy that soap and shampoo. That's why they fared pretty well. They came down in the beginning. That's a good buying opportunity. That's why stocks like Procter and Gamble, and consumer staples, when they come down like this, buy them because they typically do well when the inflation rises because folks have to buy the bare necessities like soap and other basic necessities. That's why that fared pretty well, as you can see here. And next we got XLV, which is healthcare, as many of you know here. Healthcare also came tumbling in the beginning, but look what happened to healthcare. It went nicely, and it even though it came down, but it generally did better for the year in 2018. It's slightly up in 2018, but look, it's not immune when Fed makes some statement. Even XLV comes tumbling down. There are some great buying opportunities. And you might say, I'm a Eli Lilly guy. I'm a big Lilly fan. Look, Lilly has done well. Look, Eli Lilly, they have done pretty well compared to other names here. Through the inflation 2018, Eli Lilly has fared pretty well. So take advantage of some drops in names like Eli Lilly and buy it for the long haul. And next we got here United Health here. Again, healthcare, as you know, United Health also fared pretty well. It came down when Fed made some aggressive statement, as you can see here, but overall it did very well, did better than major indices here. And then we got here XLU utilities. So utilities will do well during the high inflation environment because utilities will you need the utilities, you need electricity, water, and so on and so forth. That's why even though it came tumbling down, as you can see here, it fared pretty well in 2018 high inflation. And then we got here IYR, real estate. Real estate also came tumbling down. Look, huge big drop, huge big drop. But all these drops are a nice opportunity when 2018 was over in 2019. Look at the steep uptick here. So they will come bouncing back. So it's a good one to buy when it drops big time and slowly accumulate. And then we got here gold. You might say I'm a gold guy. Look, gold also came tumbling down. People might think gold is a good hedge, but look, gold also came tumbling down. But finally, later half gold went higher. So when Fed made some aggressive statements in October, November timeframe, all the indices collapsed, but gold fared pretty well. So that's why it's good to buy gold when it's down big time and hold it. They will. This is a very good hedge when the market collapses, like it did in October and November and December. Look, gold fared pretty well during the time. Nice hedge. And then you got XLE here, energy. You might think energy will go up and up as rates increase. Energy will also come tumbling down. Look, energy came down here. Typically, when inflation increases, dollar gets strengthened. That's why energy falls. Most of the commodities will have some effect of a higher dollar. That's why it came tumbling down. But as you can see, it also bounced back. And then we got here a quick summary for you, so that way you can ground yourself and invest slowly in great names. Look, we got S&P 500 here, over the period. And as you see here, we got high inflation environment back in 2018. Stock market came tumbling down, as you can see here. And COVID-19 in this one is the high inflation environment 2018 2019. This whole year, as you can see here, stock market came tumbling down, but it bounced back. It's a blip right now looking at the rear view. And then you got COVID-19, as you can see here, stock market huge big correction, world is going to fall apart, but look what happened, we managed to go higher. And now everybody's talking about inflation and everybody's worrying about inflation. Stock market is ugly, but we will pass this one also. It's a great buying opportunity. Buy some of your great names, great stocks, and great, if you're worried about stocks, you could buy QQQ, SMH, XLV, and so on and so forth at a bargain price. And you could also buy some great, high large cap names that we'll talk about in this channel, and you could buy them and go from there. So with that, thank you very much. Happy investing and trading. Take advantage of these small drops, buy the dips and hold for a long term. With that, thank you very much. Happy investing and trading.